Yeah, good morning, Bob, Trade Genius here. It's the 8th of August, and before the market, I want to talk. I'm trying to be a little bit more macro here for everybody. I want people really to understand what I think is taking place. And I'm going to start off with this pyramid. This is by a gentleman by the name of Exeter. Okay, and it's called his inverted pyramid of basically risk taking. And so he starts with these are the things that are the least backed down to the only thing that doesn't have a liability, which is gold. And what we're seeing taking place now, and you have to look at this from a worldwide perspective, is that the derivative bubble already popped in terms of, you saw what happened with XIV, and that's just the beginning. And then around the world, look at the countries now that are starting to unwind, and it starts in the emerging markets, and it's going to start moving uphill, and then eventually it's going to consume the major economies. Real estate peaked already this year, and then right now we're sitting what I would call DEFCON 3. Okay, the stocks are still being bid. As interest rates go up, you're going to see the muni bonds and the corporate, and especially the leverage bonds, they're going to start suffering a little bit. But here's where I really want to focus on too, because a lot of people are talking about the bond bear is back, and interest rates are going through the moon, and it's all over. And I'm here to tell you that we're going to see lower 10-year yields here pretty quick, and this will be the reason right here, and this will be the reason right here. So the higher interest rates right now are basically pricking everything. Okay, the derivatives start to blow up. Commodities are already blowing up. You could see it already. Look at copper. Okay, look at lithium. The ones that are not monetary based are already suffering. And real estate, the home builders peaked. Housing starts are down. Look at lumber futures are being crushed. Okay, so when we see the stock market roll over, you're going to see bond prices are going to jump. Bond yields are going to go down. I'm going to show you a chart in a second. All right. And then right now, you notice also, and this is kind of some of this stuff is happening in parallel. We have King Dollar right now. They're crushing every other currency out there. The reason being is that we're reserve currency, and that reserve currency is a lot of people have debt in dollars, and as their currencies collapse against the dollar, it creates a vicious circle. People have to scramble. Either they default on a debt, or they got to get a hold of cash dollars versus credit dollars to be able to continue to fund it. This happened in Europe a number of years ago, where people were getting cheap loans in Swiss francs in Eastern Europe, and then what happened was the Swiss francs started to get really strong, and people were defaulting on their mortgages in Eastern Europe left and right, because they had to pay it back in a stronger currency. That's what's going to happen here. I talked about Japan and their wage growth. The Japanese yen's going to get stronger. There are so many people that have shorted the yen and have used the yen to fund the stock market. And when the yen starts to get stronger, they're going to have to close those positions out. Stock market loses a funding source. Once people get scared out of the stock market, they're going to roll into treasury bonds, treasury yield. And then when you really know the dollar is going to be in trouble, because the dollar is going to look strong. Everybody who says, oh, the dollar bear, is that they fundamentally don't understand what's happening. It's very myopic, because they hate America and the bankers so much. They make false equivalencies. The dollar is going to be strong against a lot of other stuff. And when gold starts to move up against the dollar, then you know the dollar's in trouble. But the dollar, relatively speaking, is going to be strong against every other currency out there. So what I look for is I look to see what's the dollar doing against Bitcoin, what's the dollar doing against oil, what's the dollar doing against gold, and what's the dollar doing against food. Those are the things that are most interesting to me. Now I want to show you the chart of the 10-year. Is that, and I've had this here for a while, is that we peaked in May on interest rates, all right, and they made a stab at it. It didn't go, and then I drew this trend line here. It broke out again, Okay, but it double topped. Now we're going to roll back down again, and once we hit 280 on the 10-year, you know, 3.1 to 280, we're going to 250. Okay, you heard it here first. So if that's the situation, you get down to 2.50 on the 10-year, and you have an ability to refinance or to make your purchase, you know, that's probably going to be a good place to do it. So I just want you to keep an eye on that, and this looks pretty classic to me. If this thing starts to roll over, now what will negate it, and what's interesting to me is that they couldn't fill this gap. So the only thing for me is what will negate this move is if we make a new high at this point, but I don't think so. People are defaulting left and right. I'm going to do another video on what's happening in the bankruptcy land. It's not a pretty picture. So many things are being hidden from our eyes that are under the surface that will shock people, and then we're going to get a whole bunch of hand wringing saying, well, we didn't know, we didn't know, we didn't know. Well, I'm here to tell you we ought to know, and you got to be careful. You know, I've just been begging people, got to take money off the table, money off the table. This thing with Tesla, that reeks of desperation. Nobody has $70 billion is going to hand this guy a blank check. Okay, he's already starting to get very, very unstable, and his cars are not profitable, and his market is too small. I don't know what else to say. So, but anyway, I thought this would be helpful, and keep an eye on it. And I think the stock market's going to try to make an all-time high here, and then we'll wait and see what happens after that. Thanks for listening, guys. Have a great day. Bye-bye.